Hello, and welcome to the April 2022 Economic and Market Update from Commonwealth Financial Network. My name is Brad McMillan, and I'm Commonwealth's Chief Investment Officer. We saw a bit of a bounce in stock markets this month, but not enough to save this from being a terrible first quarter. For the month, U.S. markets were up between 2 and 4%, and developed markets managed to squeak out a small gain, but everything else was down from 1 to 3%. For the quarter, everything was down between 3 and 8%, with blue chip companies doing best and tech stocks getting hit the hardest. The reasons for the bad quarter were twofold. First, the continuing strength of the economy, along with the lingering supply chain problems, pushed inflation to a 40-year high, which forced the Federal Reserve to raise interest rates for the first time since the start of the pandemic. That increase and the fear of more drove interest rates higher around the world, shaking financial markets. Second, of course, was the Russian invasion of Ukraine. This unsettled markets and created the prospect of energy and food shortages, generating even more uncertainty around the global economy. It was a very hard start to the year for markets. And yet, despite that hard start, here in the U.S., things kept getting better. COVID cases ended the quarter at the lowest level since last summer. Hiring was extremely strong, supporting current consumer confidence and spending growth, and business confidence and investment remained healthy as well. From both medical and economic standpoints, things were much better at the end of the quarter than they had been at the start. And after pricing in the expected interest rates increases, as well as the emerging risks from the Russian invasion, markets seem to be starting to recognize that as well. And that likely accounts for the March bounce. Looking forward, the question is whether that improvement will continue. On the medical side, progress is slowed, and we may face the prospect of another wave. But even if we do see that, the economy has proven to be robust through prior waves, and with current high levels of immunity, any damage should be limited and not derail the recovery. On the economic side, so far at least, we see little or no direct damage from the Ukraine war in the data. Even future damage, such as energy or food shortages, is likely to be limited, as much of the price effects are already showing up. In other words, while real risks remain, as far as the economy is concerned, much of the damage looks likely to be limited. And that may be the message from the markets. After a tough first quarter adjusting to the prospect of higher interest rates, they're now ready to move ahead. While a number of risks are priced in, COVID, inflation, continued supply chain issues, those risks are now part of the picture rather than a shock. And so far at least, companies are proving they can operate and make money under these conditions. And that's a solid basis for progress as we move into the second quarter. Now, that's not to say nothing bad can happen. COVID could surge again. The Ukraine war could expand. Hiring could slow substantially. And if and when those bad things happen, we'll likely see more market volatility. As always, the headlines will drive much of market performance in the short term, as we saw in the past quarter. But as we also saw, despite the headlines, ultimately the fundamentals will drive both the economy and the markets. And the fundamentals remain sound. Lots of bad things could happen, but most haven't and won't. And even then, of course, we have substantial momentum to pull the economy through. Again, just as we've seen so far this year. And that's the bottom line here. As we move on from a tough first quarter, despite the risks, the economy is still growing, and the fundamentals for markets still remain sound. While we saw substantial volatility, and we may see more, that provides a good foundation going forward. That's it for this update. Thanks for watching. Join me in May for the next one, but until then, be sure to check my daily blog, The Independent Market Observer, for more timely comments. Stay safe, stay sane, and stay healthy. We are getting through this together.